Hi guys, so today I'll be explaining two ways you could use stock market to have a better rate of return for your investments. The first one is the age-old mutual funds. I know it might sound boring, but it's actually pretty good. If you just do a SIP towards a mutual fund, SIP means systematic investment plan, where you contribute a certain amount of money every month towards a mutual fund. Then, believe me or not, within few years, it ends up growing a lot, and usually mutual funds in India have a average return of investment around 9 to 12%, so which is very good compared to any other idle money which you would keep in your bank account. So I would suggest that you could do this, and I'll also show an example and few funds which I have invested in. You can see I have logged into my Groww app. So here it's pretty simple. uh, you search for any stock or mutual fund you're looking for, and I would suggest that if you don't know much and if you want to passively just grow your money, just go to mutual funds and search for Nifty. So, for example, this is UTI Nifty Index. It has a rating of 4 stars and has a fund size of 3,500 crores. And you could see many other information about it, where like who's the fund manager, what's their history, and how the uh, how the fund has been doing, and many more. So you could read through all the mutual funds you like to see and would like to invest in. Then just start putting a certain amount of money. Few mutual funds have roughly around 500 rupees as their minimum investment, as you can see, but few have as low as 100 rupees. So you could look into mutual funds, stuff you like, and just go for it. And if you're not sure how to do, then just look into this collections, where you can look into high return mutual funds, tax savings mutual funds. But it is very important to understand that high return also comes with high risk. So if it's showing 20%, 18%, 16% upwards return, it also can have -2%, -3% return. So always higher risk comes with higher reward. So if you try balancing your risk and reward and see what suits you. And if you see my SIPs, then I have roughly around 6 or 7 SIPs which I invest on monthly basis, and I like diversifying my portfolio. So I have invested in Nasdaq, and which is the US stock market. Uh, Tech, most of them in Nasdaq are usually tech companies, so I've invested a bit in that, and other low duration fund, Indian technology fund, and other small other funds which I felt had good value. So you don't have to follow me, just look what you like and see what you understand and start investing in it. If you use the affiliate link below, then 100 rupees will be deposited into your wallet, which you can use to start your investment right away. And also you could start buying gold if you want, through Groww app too. It's digital gold, you won't be delivered any gold, but you'll have a certificate telling that you have certain gram or certain weight of gold in your demat account. Second method would be actively buying stocks and trading if possible. So for this, I would suggest Zerodha as the brokerage, as it's pretty good and pretty simple. I'll just show around Zerodha how it works and how you could easily place orders there. So this is the interface of Zerodha. Like when you enter, this is what you're going to see. Uh, Here it's going to be empty, but you could add the stocks which you're looking at as a watch list. So there'll be file or watch list which you can use. Presently the market is closed. It's still 4:30 a.m. So yeah, that's that. But pretty easy to navigate. You just go to the search bar, type anything, which any stock you're looking at, maybe SBI maybe. So let's go to SBI. Now here you get around five options. The first option is you buy without looking at anything, or you sell in the sense you short it, or if you already have a position you just sell the equity which you already have. The third is you open the chart. So the chart usually rotates on the right, and the fourth is market depth. So you see how many orders are being placed on the buy side and on the sell side. Now presently the market is closed, so there's no movement, but you also get to see open, what was the days open, what was the high of the day, and what was the lowest price of the stock in the day. So low, high, and open. So that's that. Then the fifth one is you add it. So uh, you add it to the watch list. So if you're in watch list 4 and you search SBIN and you click add, then it goes to watch list 4. So you'll be basically able to see this. One second. Yeah, so you'll be able to see SBI and what the movement is by seeing watch list 4. So that's how it works. Now you can expand the chart, you can make it big by just clicking pop out chart and look at it and decide whether you want to buy or not. Now it's pretty simple from here. Either you buy, when you buy, you if you're going to invest in long time, then you don't have to worry. Just click long term, click the quantity which you want, 20, 100, or the amount which you're ready to buy at, and here they'll show you the margin required. So you will get to know how much money should be there in your wallet or in your demat account with Zerodha, so that you can buy 20 shares of SBI or something, as 20 shares of SBI, Kotak, or any other thing which you want to buy. And you see there are two things here when it comes to price. One is limit, one is market. So market means that you don't mind what price you're paying at. So it doesn't matter if it's 370, 340, or 350. You just place the order of 20, and when the market is open, it gets executed and the stock gets allotted under your name. But in terms of limit order, you type what price you want. Let's say it's presently it's trading at 353, so you would say no, I'm not ready to pay 353, I'm only ready to pay 340. So you type in 340 and you click buy. Now until the price goes to 340, the order doesn't get executed. So when it reaches 340, your order gets executed, and basically the 20 shares, 30 shares, or whatever shares you have put in to buy will be transferred under your name, and it will be delivered at the end of the day. Now that's market and that's limit. And when it comes to more about intraday trading, I'll make a different video about how to go about that, and about stop loss and other stuff. But presently it's just buy. When you buy, click long terms, that's CNC, that's cash and carry, and quantity, the price. Guys, don't worry much about stop loss or anything when it comes to long term investing. Just click on either market order or limit order, whichever you feel is right, and place the order. It will get executed. And when it comes to cash and carry, which is long term, Zerodha doesn't charge you anything for the whole process. But yeah, it does have an annual maintenance fee where it charges roughly around 200 rupees for annual maintaining your stocks, your portfolio, and other stuff. So that will be the only charges. And if you're interested, then please use the link below to open Zerodha account. And it's pretty simple, it's pretty easy. Just don't worry much, and yeah, you can do it. Invest or buy stocks which you find value in. Don't ever use news as your source, because if it's in the news, then most probably it's already overvalued,
and a lot of people are talking about it. Most of the time the price is already reflected, and it's going to be overvalued, and buying it might not be the best deal you would get. So do your analysis, think what you like, what you would have invested in if it's the only stock you would ever invest in. So just look at it, analyze both fundamentals, see the technical analysis, do many more analysis, then finally buy stocks. And I will be making many more videos about technical analysis and fundamental analysis. So if you want to subscribe, please do. So that's that. Now let's get back.
These are the two ways using which you can get a way better return on investment compared to just keeping money in your savings account or putting into a FD. So I would highly suggest that please try at least one of these. It will be really helpful in the long run. Thank you.